Hey there, are you thinking about moving to Northwest Arkansas? This is Thad with Flat Fee. I'm really excited about today's show. We've got Lance House with us today at Leader One.
How y'all doing?
Lance and I met probably back in 2003. As I've been sharing with you, my wife and I moved here from North Kansas City to Northwest Arkansas back in 2003. I was a wholesale rep in the mortgage business, and Lance had a company called Asset Mortgage at the time. I would say Lance has been one of the most experienced lenders in the area for the longest time. He doesn't look like it. He still looks like he's in his 20s. Lance, how long have you been in this area?
I have been doing mortgages for 27 years and 25 in Northwest Arkansas.
Wow, that is a long time. I really don't know of a lot of people that can say that, that I've talked to. But when I first met Lance, he had a mortgage brokerage shop in Fayetteville. Eventually, we decided to start a Leader One Financial at one time, and then my journey took me to real estate. So I wanted you guys to get a feel for what's going on in the market today, and we're going to talk about some questions on the mortgage industry here in Northwest Arkansas specifically, but some of this might hit home about macro economy too. So it's going to be a good conversation. But one thing we wanted to do is when's the best time for somebody to get qualified with you right now that's coming from out of state?
Yeah, good question. I think you should get qualified within at least 60 days, even 90 days prior to start looking at a house. You know, it used to be that people would assume, well, I have good credit, I qualify for a loan. There is so much more involved as far as debt ratios, down payments. And if you're moving, you know, you got to make sure that your job is transferring you. You can't use income from another state to move here unless your job says you can work remotely. So I would always, a minimum of 60 days to get pre-qualified, and the approval is good for 120 days.
120 days,
Yes,
and I agree with that as well. There's so many people that I talk to in the real estate side to where they don't even know, they think they know, but until they actually have a lender do that, there's sometimes there's surprises that pop up, you know, they didn't know on their credit report, their tax returns, if they had a side business, side hustle, which a lot of people do these days.
Yeah.
They had some write-offs on their tax returns. They're not thinking that, hey, that's gonna take away from my income. But when, you know, it's just a safe practice to do that ahead of time.
It is, and I mean, I can't tell you how many people who maybe have not done a house loan for 15 years. Back then it was a lot easier. Well, times have changed and it's a lot tougher. So just because somebody got approved 15 years ago doesn't mean it's gonna be the same process now. So 60 days minimum.
We see that sometimes with parents, you know, looking with their kids. It always puts some challenges because they think buying a house was the way it was when they bought, but they never did buy again. They just
Correct.
got that same house. So
Yep.
nothing wrong with that.
No, nothing wrong with that at all.
So we know interest rates are a concern right now. Do you feel like there's some different programs and options to make the home buying process a little bit better than what people are thinking right now?
I mean, yes, the rates are kind of high, which makes your payment kind of high. One of the things that I'm seeing a lot of now is sellers providing what they call a 2-1 buy down for the buyer.
Okay.
The seller has to pay a 2-1 buy down, the buyer can't pay it. What that does is, let's say the rates right now were 7%, and the seller agrees to pay for a 2-1 buy down.
Mm-hmm.
Well, that 7% is going to be 5% the first year.
Okay.
Then in year 2, it's going to go up to 6%, and then the year 3 it's going to go back to what the rate was at the original time when you did the loan.
Okay.
But the good thing about that is, let's say the rates go down in a few years, you want to refinance. Any money not used in that 2-1 buy down will be a principal reduction to your balance.
So you're not losing.
You're not going to lose it if you ever refinance. So it gets people being able to come in, afford the payment first few years, and obviously the whole goal is to refinance at some point in time.
You're kind of basically buying time,
Correct.
hoping those rates come
Correct.
down while that subsidization is going
Right.
on.
And the worst case scenario is if the rates didn't get better, after year 3, you're going to be back to what the rate would have originally been when you bought the house.
Gotcha. And you know, for sellers that aren't advertising that, us as real estate professionals, we can actually write that in the offer too.
Yes.
especially with the house that's been on the market for 60 to 90 days.
Those are the ones I'm seeing that are getting accepted. Obviously, if you're in maybe a small house where there's gonna be 10 offers, well, you probably won't get the seller to do that. But
Yeah.
if you get any property that's been on the market for a while, or it's a higher priced house, which doesn't maybe sell as quick, I've seen sellers accepting those.
So it's kind of another strategy that some people aren't taking advantage of. So if your realtor or lender, they're not on the same page with that. There's some lenders that don't even promote that.
They don't even ask, they don't know about it.
Yeah, so it's one of those things you've got to know to ask. And like I said, we've been doing this for a little bit. I know we still look like we're in our 20s, but we do have some scars, and we've been beat up.
I think he's looking in a different mirror than I am, because I feel like I look old.
We're getting there. What is the most common loan you are seeing in the market right now?
It's really nothing out of the ordinary. Conventional, FHA, USDA, VA. I mean, that's really what I'm
Doing
seeing.
a mix of all of them?
Yeah, I'm not seeing a lot of anything that's really wacky or off the cuff.
Okay.
It's pretty much just your basic.
Could you
loan.
kind of break down real quick? We
Yeah.
don't have to go into
Yeah.
detail, but like the USDA loan, can you tell people in case they're not familiar?
Yeah, so a
with it? It's called
USDA, RD also, yeah, USDA loan is designed for smaller populated communities. If you were to buy a house in the USDA footprint, you can buy it with no money down. The seller can pay your closing costs. There are some income limits on how much you can make as a family household income. But if you want to live in those small areas and buy a house no money down, that is the great option.
Those are a lot of first-time home buyers, like you said, that are typically doing the RD.
A lot of first-time home buyers. I mean, it's really easy. When somebody contacts me and wants to know if the house that they want is in the footprint, they just give me an address and I can pull it up in the 5, 10, 15 seconds.
Okay,
Really
cool.
quick.
And also I have that app as well, so if you need help with that. Well, FHA, I think a lot of people probably know what FHA is, but if you want to just give a simple breakdown.
FHA is a minimum of 3.5% down payment. It's not as credit strict as a conventional loan, and they allow higher debt ratios.
Which is nice.
Which is nice. I'm seeing a lot of people who would normally be a conventional borrower doing FHA because they allow a higher debt ratio, so they can buy more of a house. So,
Okay.
but
Or if maybe the spouse has low credit score. and
Correct.
You try to do it
yeah,
just under
so you don't
1.
have to have perfect credit to get an FHA loan, but you don't. I mean, you can have great credit and get an FHA loan.
Yeah. So some of the great credit people, what you're saying, are
doing
that
FHA.
instead of conventional.
Correct.
Okay, good to know. And then we've got conventional, of course, which, do you have any 3% down?
Yeah, we have
conventional?
3% conventional. Conventional is usually designed for the people who have great credit, have a decent down payment, but you can get in as low as 3%. And that's normally what I just call your good credit, income's good, job, I mean, all that stuff is good down payment. is
Everything's
good.
pretty clean. They
Correct.
can walk sometimes a little bit maybe on top of water.
Correct.
Okay,
Yeah.
well,
Yeah.
you know that can't happen, but
Correct.
I'm trying to use an analogy, and I'm not very good at that stuff. And then we have VA, right? For
VA.
veterans.
One of my favorite loans for veterans.
Me too.
A veteran can buy a house, no money down, no mortgage insurance. The seller can pay their closing costs. It is actually the only true loan out there that is no money down, no mortgage insurance. Credit is not as strict. I mean, it's probably the best loan out there.
I forgot to say this at the beginning, but if you stick around, if you haven't already left the video, we're offering kind of a unique selling proposition at the end. So I hope you can stick around for that. Does Leader One have any like niche programs or unconventional programs that you know about?
Oh my gosh, we have so many programs, but I'm just gonna just kind of handle 2. These are for borrowers who don't fit in that conventional FHA, USDA, or VA, but a lot of times self-employed borrowers make a lot of money. They just don't show the tax return because they don't want to pay Uncle Sam.
Yeah.
We have a program, bank statements. If you give us your last 12 or 24 months of bank statement, we can add the deposits up and take a portion of those deposits and use that as your income.
That's starting to come back.
Starting to come back, yeah.
That's good.
A lot of self-employed people just don't show much in their tax return.
Is that typically 20% down?
That's typically 20% down. If you have good credit though, there are some that'll go 15% down.
Okay.
And one of my favorite ones that's really been great is the DCSR program. It's basically a debt ratio service coverage. It's for investors. So for that self-employed borrower who doesn't show any income on his tax returns, they've got great credit and down payment, we can do a loan with no verification of income, as long as that new house, the house payment is equal to what the rent will be received.
Okay.
If that
So
is the case,
you just get a lease agreement signed kind of with that?
they do a market rental analysis.
Okay.
A market rental analysis.
Okay.
And if it is within a certain percentage of the house payment, we don't get to verify any income. Now the rates are a little bit higher.
Sure.
Because
Investing.
it's investor, but
Yeah.
it allows lots of investors to get into a property and start their journey as being an investor.
Man, that's awesome. You learn something new every day.
Yeah.
I didn't know that program was out there.
It's a great program.
So that would be a good one for investors out of the state looking to come into this area. What are the best practices for people that are moving out of state into Northwest Arkansas to make a loan go smoothly? What's the biggest hurdles that you see, and what would you appreciate your clients to do to help things go smoothly? I know that's kind of a loaded question.
Man, the hardest part of our job is, what makes up a loan obviously is credit, income, down payment, collateral. And one of the biggest problems we have is down payment. So you can't have a cash down payment. We have to verify the down payment. And every deposit that's not payroll, we have to verify where that money comes from. So
Can you explain like gift?
Or let's say you have money moving around between checking, savings, another checking, another savings. Well, guess what? We have to verify each transfer. So if you're moving money between 4 accounts, we need the last 2 months bank statements for all 4 accounts. So to make it easy, if you're gonna be buying a house in the next 60, 90 days, just keep all your money in one account.
Just make it simple.
It'll make it so much smoother and so much less stress on you chasing documents for the lender.
Yeah.
So that's super, super important. No cash deposits for 2 bank statement cycles.
Okay.
That's probably the hardest part of our job.
If you could get a hold of the people before they buy and just tell them to do that one thing,
It would make my
it would-
job a
it would
lot
make-
easier.
and make their lives
Correct.
easier too.
Yep. And don't apply for lots of credit within 60 days of buying your house, because every credit inquiry that is not explained by being a new account on your credit bureau, we have to get explanation of what they were.
And then, the clients feel like you're trying to draw blood from them, but you're
Correct.
really not. That these are things that they could do on the front end just to make
Correct.
it smoother.
And everybody know this. A lender's not trying to draw blood. A lender's trying to make sure that you have the means to pay for the loan.
Yeah.
And these are the steps to make
Paper
sure you
trails, basically
Correct.
anything they do, they just need paper
Correct.
trails. Gotcha.
Correct.
Good to know. Are you seeing any problems with the appraisals in the area right now?
Not a lot, but I have seen a few appraisals that have come in low. And one of the big things I've seen is, let's say they're buying a house, the seller's agent didn't measure the house, they just went off county records. And when our appraiser went out there to appraise it, the house might have been 100 square foot less than what was in the MLS listing,
Yeah.
which makes the value come in lower. And so then you're going back and saying, hey.
I know AR County data too, that's sometimes off compared to what the
It is.
MLS, and they go off of that.
Correct.
Because I just had one that was kind of higher, a lot higher
Right.
than what it was actually measured at.
Yep.
So that's good to know, and that changes the ball game. Like Lance said, it'll make the appraisal come in lower, because if you got it at a 3,400 square feet, it's what you're showing, and it comes in at 3,100 square feet, you're gonna have some issues with
You
the
got some issues
appraisal.
with appraisal.
Yeah, so
Yeah.
those are good little tips.
But I will tell you that every time they do come in low, and it's rare, it's not like all the time, but the lender, the realtor, they'll negotiate with the seller to
try to make them
try
understand.
to work it out there to lower the price, whatever the case may be.
Yeah, we've done that before.
Oh yes, we have.
How often do you work with people's credit, like say if they're maybe a little bit more challenged,
Yeah.
credit challenged, to get their scores to qualify where they need to be?
So when we pull a do loan application, we pull credit on a borrower. Not every borrower is going to qualify. This is the way it is. The ones you don't qualify, we're going to sit down with them. We're going to give them a game plan and go over the credit, tell them what they need to do, what they need to repair, what steps they need to take to raise their credit score so they'll be a future home buyer. He said those customers are just important to us, who's someone who's qualified now, because they'll be a buyer in the future.
Right.
And we care about our buyers. We want to be their lender for life. So therefore, we'll work with them. We'll give them a game plan. We will check back with them every 30 to 45 days to say, how are you coming along? And we'll hold their hand and walk them through it until they'll become home buyers.
So it might be like with some of these people moving out of state, which we've got, what, 30 to 40 people, is that the last you've heard today,
Yes,
moving
yes.
in? So it could be something too where we could put them in a 6-month rental if we had to.
Yes.
You know, and then, you know, you're working to get them where they need to be within those 6 months.
Correct.
Or a year. you
Yeah,
know.
doesn't matter. I mean,
As long as you're still doing it.
that's right. Just because you're not a home buyer, that doesn't mean you
Yeah.
will never be a home buyer.
Right, that's a good point. And then on the PMI, can you, I know a lot of people hear this term, but can you kind of explain to them what PMI is?
Sure. PMI is private mortgage insurance. Private mortgage insurance protects the lender in case you default.
Okay.
And the whole thing is PMI is put into place when, like on a conventional loan, if you put less than 20% down payment, you're going to have private mortgage insurance. It's calculated based off what your down payment is. So somebody who puts 5% down is going to have higher private mortgage insurance as opposed to somebody who puts 15% down.
Gotcha.
The bigger your down payment, the less your PMI is until you reach 20%. Good thing about PMI is once you reach 20% equity, let's say you put 5% down, and in 7 years, you'll reach to where you have 20% equity, that's gonna fall off.
On the conventional.
On the
side,
conventional. FHA has private mortgage insurance. That's for the life of the loan, and that's regardless of down payment. So even
But
if
you
you put
said
20%
kind
down,
of like back to, you're saying a lot of these people are going to FHA, they could
They
go
are.
conventional
Now-
just because it's a better
now FHA, if you do put at least 10% down, that will fall off in 11 years.
deal. Oh, okay.
So
Okay.
FHA will fall off. And then USDA has what their version of mortgage insurance is also, and that's a no money down loan.
And then
So
the VAs, it's just got a funding
it's
fee.
got a funding fee.
Where it's financed in
Correct.
front, but if you're 100% disabled,
You don't have to pay
you
for
don't have to pay that funding fee.
Correct.
So those are good things to know. Again, he's got different programs he can go over with you. Some maybe lender paid MI or split premiums. There's different ways, but we just want to make sure you guys are knowing the basics today. If you want to dig into this more, you know, definitely Lance is willing to have a conversation with you. I guess the last question I want to kind of ask you is, are you seeing a lot of jumbo loans in Northwest Arkansas?
No, I have not seen a lot of jumbo loans. I mean, you know, those houses are out there and all that. Anything over 766, 540 is a jumbo loan.
Loan.
So, I mean, most of them are trying to put a down payment
To get out
under
of
that. Yeah.
And the reason being is they just don't want to pay the higher
Higher
rate.
rate. It's a
for
higher
jumbo
rate for
loan.
jumbo loans.
Okay, so they're just trying to get underneath that so they can pay
Correct.
the lower
And
rate.
usually, people who are buying those houses usually have the means to put higher down payment. Some even would pay cash, so therefore, if they can just put enough down to keep it under the jumbo loan limit, they usually try to
That
do
makes
that.
sense. That makes sense. So one of the offerings, I'll let Lance explain what he's going to offer today. This is good until the end of the year, by the way, 2023. We both have agreed to do some sort of offering, and all you need to do is, this is if you go with Lance and myself, we're putting together kind of a unique benefits package, but I'll let him explain what he's willing to do.
If you buy a house in Northwest Arkansas and you use leader one for the home loan, we'll give you $500 off closing costs or a free appraisal.
Awesome. And I'm willing to match that and do, he told me not to take any commission on the buyer side and just give that away. Unfortunately, I've got bills I've got to pay.
And then he told me, well, he's doing that I do my loan at 0% interest rate.
Yeah,
So I couldn't do that either.
Do that. So we decided to do this package. He'll do 500. I'll match that 500, and that way you get $1,000. You can use it towards closing costs,
Yep.
appraisal. The code is L1. When you call me or Lance, just say you want the L1 package, and we'll know. You might just let us know too, it's coming from the video, so we can track that and know where you're getting that information. Before we end the video, can you share with them what's the best way to contact you?
Yeah, you can call me 479-271-9100, or you can reach out to me on email at Lance, LANCE, HAUTH at leader, LEADER, one.com.
Awesome. And if you're buying in 7 days or 70 days, you can call, email, or text me, whatever works best, 479-200-0863. Hey, Lance, we appreciate your time today.
Thank you.
Hope we brought some good content out there to the people, and you guys have a great day.